What's going on, everybody? This is Cole from the Free Trading Academy. Today, we are talking about trading plans. All right. This won't be a very technical video. As you can see from my notes here, we're just going to work through these 8 points. But I do not want you guys to skip past this. All right. Don't make the mistake that I did when I was a new trader and I was just hunting for the next strategy, hunting for, whatever, thing that I could use in the markets to help make me more money. Honestly, trading, you ask most traders, I don't know where this number came from, but everybody says it's 80% mental, and I agree with that. As you could see from this course, this supply and demand strategy, finding buyers and sellers and major turning points in the market, really isn't that complicated. Your plan in terms of the actual strategy probably is pretty easy. The hard part is being disciplined and focusing on doing that plan that you've created over and over and over again until you have it near perfect. All right. So, what goes into a trading plan? Number one is your why. Why are you trading? Why are you doing this? Is this a side job? Is this something that you want to do professionally as a career, which we will get into in the coming videos? Is this just something you're playing around with? You're just interested, a hobby? So get that down. Two is your time commitment. How much time do you have to dedicate to this? Are you somebody who can sit in front of a computer for 8 hours a day? Are you a full-time employee? Do you have kids? How much do you want to devote to that? And then when you decide on that, stick to that. So if you're somebody who's like, hey man, I just want to get up early in the morning. I want to trade for 2 hours. I want to trade the New York session, London overlap for 2 or 3 hours, or I just want to trade the New York session when it's most active, in the morning, from about 8 to noon Eastern. Maybe, you work a overnight shift and, you just want to trade the Asian session. Pick a time and then stick to that. As soon as your session is finished, close your laptop, log your trades if you did take any, and then go about your day. If you're a swing trader, then you have to be a little bit more flexible, so dedicate maybe an hour a day, going over your charts, going over your watch list, see what price is done, set your orders, and then go about your business. All right. Third is your trading goals. So you should have a goal. In my opinion, it's dangerous to set a dollar amount because then you'll chase price, you'll chase money. But go for pips, especially if you're starting out on a small account. 20 pips might not seem like a lot, if you're trading micro lots. But if you're just starting out and you're able to do that over and over and over again, then you could show that to an investor and you could say, hey, this is my return on this small account. The strategies won't change if I get some more money to trade with. Are you interested? That's how you play that game. So, go for pips, 20 pips, 50 pips, 100 pips a day. Go for a percentage gain. Like, hey, I want to make 22% return on my account every month. And that's a very doable goal for most professional traders. That's about 1% a day. So if you're trading $1,000 account, then, your goal is about however many pips equate to $100 a day. So always work it out in pips, though, or points if you're trading the indices, because a dollar amount, just mentally could get quite risky with chasing that money. Risk appetite and risk management plan. So this is point number 4 right here. What is your risk? Are you a more aggressive trader? Kind of going back to some of our previous videos. Do you trade the initial breakout of a zone? Do you wait for the retest? How are you doing that? And then figure out how much you want to risk per trade. So a great rule of thumb is when you are trading stocks, futures, Forex, you need to be thinking more about how much you're willing to lose as opposed to how much you want to make. Because when you have that dollar amount ready in your mind, like I'm willing to lose $200 a trade, $500, $5,000, $10,000 per trade, then now that frees you up and that helps you to stay relaxed, especially when the markets may not be going your way, because you already know that you've committed to lose a certain amount of money in order to gain a certain amount of money. All right, so put together a risk management plan. Are you risking a total of $100 total? Great. All right, figure that out in terms of the micro lots, the mini lots that you may be trading. All right, if you're a scalper, maybe you might put a little bit more, but figure your stop losses. All right, so have a solid risk management plan. Because the worst thing is to get into a position and you have no plan and price starts running in the opposite direction and you just sit there waiting for a reversal, which oftentimes doesn't come until your margin called and your account is blown. Number 5 is available capital. All right. So, are you trading with your own money? Are you trading with institutional money? Have you created a fund to pool other people's money together to trade on their behalf? How much money do you have to trade with? This will inform your risk appetite and risk management plan and your trading goals as well. Number 6 is the markets you wish to trade. So for me personally, I prefer the indices above all else. Then I like to trade gold. Then I like to trade GBP, JPY, Euro USD, and occasionally I'll trade oil. So I like to diversify what I do, but again, I've been trading for quite a long time. So if you're just starting out, pick 3 to 5 pairs or instruments, and by instruments, I'm talking, indices, commodities. Diversify a little bit. Maybe follow the S&P 500, GBP USD. And that's a nice liquid and volatile currency pair. You'll have a lot of opportunities there. Maybe oil. It's up to you. Maybe you want to do all currency pairs. So pick 3 to 5 and stick with those and master those pairs. Point number 7 in the trading plan Bible is strategies. So this is what the majority of this course has been dealing with, is different types of strategies to take advantage of supply and demand and protect yourself from market manipulation and how to actually use that in your favor. So incorporate those into your plan. Are you a breakout trader? Do you like to trade the retest? Do you like to incorporate channels? What is your edge in the market? And hopefully this course has given you a nice edge to take to the market. All right. And then lastly, record keeping and journaling. All right. So I just put together a quick little example. So this is a trade from this morning, Monday, August 30th. This is a ledger. So I like to keep a ledger and then a separate journal. So the ledger is a more detailed, I wouldn't say it's super detailed, but it's just more easier to look at, and a lot more analytical. So you have today's date, Monday, August 30th, New York session, S&P 500. I took a long at 4,500 after this price zone, which was previously supply, was violated. It got retested and then became demand. So we took a buy there. All right. So the reason for the entry, upside break of supply zone, entered on the initial break, and then added to my position on the retest. Exit, we're holding right now. Move stops past break even for a risk-free trade. So even if we get a retest, we still get a nice profit. So the result of this either way is a win. All right. So this is simple. This is in Google Sheets. You can take that with you on the go. So I like to use Google Sheets for that kind of thing because it saves to a cloud. And then journaling is something a little bit different. This is a mental game, as I said earlier. And if you've been trading for a while, you know exactly what I'm talking about. So it's good to, kind of take a step back, whether you do it daily, weekly, and just write about your emotions, how you're feeling, how the markets have made you feel this week. You could get technical in there, talk about levels that you're waiting for price to get to, setups that you're waiting on. But you really just want to dig into why you took certain trades, because we've all been there. And even me now, sometimes you just don't have a great day in the market and you're fighting that urge to revenge trade. Maybe you do revenge trade. So you're just trying to get back at the market from taking something from you, is basically what revenge trading is. So you want to talk about that in your journal. You want to be real with yourself about how you're approaching the markets, because you do not want to approach the markets with a clouded mind, with a dark cloud hanging over your head, because it will negatively influence your trading decisions. Okay. So this is your trading plan. I have a detailed trading plan that I will make available at a later date, but I just wanted to go over a high level overview of what should go into yours. So your why, time commitment, trading goals, risk appetite, available capital, which currency pairs and other instruments that do you want to trade, what is going to be your main bread and butter strategy or strategies, and record keeping and journaling. All right, make sure you keep a record so that you could go back at the end of every day or week and review your trades and see why you took those trades. That's very insightful. All right. Thank you for tuning in. Stay locked in to the Free Trading Academy. We'll be back soon. Take care.